Money on my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray Dinero, and we are back at it again for another episode of our Robinhood portfolio update, and I'm excited about it. Before we get into it, I want to give a reminder to catch that like button. Those of you who have been here 2 times, this excludes you guys who are in the wolf pack already, because I know you guys have already subscribed, because you guys have been tapping in with me down in the comments. I know you're here. We talk to each other. We have great conversations while I'm doing my uploads, and I love it. But for all of you who have not hit that subscribe button yet and turn that bell notification all on yet, I am inviting you to join the wolf pack and do so right now. Lastly, share this video with your peoples, because over here in the wolf pack, there's always room for more. We hunt like some wild dogs, and getting rich by yourself is no fun. Like, why would you want to be the only person with money? Like, why are you going to be the only one eating? Everyone else is at the table emaciated, and you're just sitting there with your cup running over and a pot belly. Like, that's not going to be cool. You got to take care of your people. So definitely share the content. We're going to go ahead and jump right into it today, because I am excited, as you guys will note, because I do show the portfolio, and there's a reason that I do this. It's for verification, social proof, receipts, if you would. So many people out here do not give receipts. So many people get on with their non-profile picked accounts and have comments on what those of us who are actually doing are doing. And like I always say, when I started this channel, from anytime you see me literally dog walking anyone on a panel in a debate, somebody's got to tell the truth. Just tell the truth. Like, if it ain't you, just say that. If the fact that some of us are moving in a different direction and we're willing to share the good, the bad, and the ugly as we're on the journey to just document it, and you got some prop account, just say that. So I always show the brokerage before I show Snowball Analytics, because Snowball Analytics is specifically a tool that I use to project forward. And as we're going to see today, it's not always accurate. So we're looking at the account right now. I like to show the account first. So what are we doing? We're the account we're sitting at, and this is building an account from scratch. Obviously, we've got extra money. Any extra income that I get that comes in goes into this account. The caveat there is I've been working. So I missed last week because I was working, getting some extra money. That extra money hit this account. We still haven't got our tax money yet, and I thought the tax money was going to be what pushed me over $2,000, but, you know, we've been out here grinding, we've been hustling. So the account's got $2,457.87. And let's go ahead and break down what the account is. Let's go ahead and take a look at it and see what we're working with here. We are still holding. We've got 5 positions. We actually got all 5 positions because, as I previously stated, our main goal was to bum rush these positions and get them up to $500 in each position. And then we were going to start dripping and actively managing not dripping, wheel strategy, which I'm going to do a little excerpt on that here in a little bit. We're implementing the wheel strategy, which we're going to go over here in a little bit. But the initial onset, I wanted to get $500 into each position so that I had like a little something coming in from each position. Now, a couple of these positions we're going to have a little bit of fun with, I think. And we're going to be doing some active management, which means that, like, until we get, now that we're at the beginnings of the wheel strategy, the next goal is to get LFGY to 100 shares. And honestly, it's going to be 200. I'm going to want to get that to 250 shares. Like that's where I want to go with it, just because that'll give me a guaranteed $100 a week, pretty much, more or less. 250 shares. Came to the conclusion that, like, with that, with the range that LFGY has been in, that'll be $100 a week, which is actually kind of where I'm looking to sit. So our first goal, now that we've got $500 into each position, is to get LFGY to 100 shares, because that's where our income lands. As we go over the wheel strategy here in a little bit, I will break that down for you guys completely as I can. But I'm excited. We did that. We also unlocked our margin. So now I do have margin active on this account. For those who do not know, I've got a referral link down in the comments below, but Robinhood Gold, if you have margin, which, caveat, one of the things I didn't know going in, you have to have $2,000 in your account before they'll let you have margin. Just something to note. The first $1,000 in margin is at 0% interest. And after that, it's only 5%. There's some stuff that we might be looking to do over here in this account now, because that 5% on your margin, that's interesting to me. Very, very, very interesting to me. Because I'm paying 12 over at Charles Schwab. So I'm not going to lie. That's one of the draws that they got over here at Robinhood. That is dirt margin. So when we're looking at how we're moving and making these navigations, that's going to be something that I'm going to keep in the holster as we're building this account out, because a little bit of margin you can make some moves off some 5% interest, just saying. But yeah, let's go through it. LFGY, we're sitting at 17.8 shares, almost at 18. Now, obviously, I'm recording this Thursday night so that you guys can get it bright and early on Friday morning. So those of you who are waking up, tapping in, getting the good word first thing in the morning, welcome to Bag Fortification Friday. We do not fumble bags on Fridays. It's payday for some of y'all. It's going to be payday for me. We're not fumbling the bag. Whatever plan you got in place, follow the plan. If you don't have a plan in place, make sure you are working on getting a plan, because if you don't have a plan, trust me, everybody else has a plan for you and that money that you just got, and they want you to fumble that bag. We're not doing that in the Wolf Pack. So we will be making some more purchases tomorrow. Obviously, we're going to have a little bit of cash infusion going in there. We got a little bit of margin deployed, but that's just going to eat up that margin a little bit. We're going to go ahead and redeploy that capital. It's 0%, which for me, free money. And yeah, I'm digging it. So we got 17.8 shares of LFGY. YBTC, we are at 12.86 shares. COIW is at 18 shares. QDTE is at 16 shares. PLTW is at 16 shares. And one of the other things that I wanted to note was we actually started buying some Robinhood stock. Why is that? One of the things that I am actively doing and am an advocate of, and you will see this over in the Charles Schwab long-term holdings account as well at some point here in the near future, once we start getting our dividends in, because I got to play some catch up. Every month after I pay my Robinhood fee, I am buying a Robinhood share of stock, because I am heavily utilizing this platform. They're going to be making money off me off the credit card. There's no reason I wouldn't want to own a business that I'm paying anyway. For me. Now, I don't necessarily extrapolate this out to everything that I do, but when it comes to finance, absolutely. If it's a platform that I'm using, like, I don't do it with banks, but if it's a platform that I'm using strategically, especially from an investment standpoint, especially with the innovation and the stuff that Robinhood's bring into the market for the average Joe like us, I'm buying into that company. I'm also going to start doing the same thing with my Charles Schwab. Like, I utilize that platform a lot. They're making money off me. They're making interest off the margin that I keep out over there. When I take margin, they're getting fees off me and stuff. Robinhood's getting fees off me and stuff. And these are things that I'm looking at and using every day. There's no reason I wouldn't want to own that. So those are also going to be long-term holdings. As far as this portfolio, it is the only long-term holding that I'm active on at this juncture. And yeah, I'm happy about it. So every month, once a month, we'll be buying at least a share of Robinhood, and yeah, that's what we're gonna be doing over here. I'm pretty pumped about it. I'm feeling good. Let's jump in and get this show on the road. Now let's jump over into Snowball Analytics. I am not going to forget that I've got some things to share with you guys. So we're going to go to a different window. Where is it at? Oh, hold on. Cancel that real quick. Let me switch that window out because that's end of the show. See, that's the thing. If I do people favors, you got to watch the whole episode. So we're going to do, you got to get to you got to eat the meats to get to the desserts. Now, portfolio holdings. Oh, that actually might be why it's off. See, and this is the reason we look at things. Hold up a second. Let me see here. Nope, that's right. 18, 16, 16, 17. Yeah. So it just did not update right. Yeah, those are all the same numbers. Okay, so we're going to go ahead and pull this screen up so that you guys can see what I'm talking about, because this is the stuff that the gurus don't show you because they're gurus and they don't want to be wrong. They don't want you to see they're bad when they're upside down on trades, and they don't want you to know that there's a discrepancy between Snowball Analytics and we don't want that page. They don't want you to know that there's a discrepancy between Snowball Analytics and the brokerage account. So as we're looking here, I just want to just confirm that we are looking at the same numbers. So it's showing you the share price. Now this was probably at like peak today. I'm not sure how often the free accounts sync. I don't even know, because we're having an issue with the main portfolio that I have linked. I've got to do some massive Snowball Analytics surgery to dumb that down and go back to manually entering this stuff, because they're not syncing, which is what I pay $100 a year for my account there. Still not syncing. It's been over a month. They still haven't fixed it. It's like the most annoying thing ever. It won't pull my transactions from my Charles Schwab. It's literally the only reason I have it. Kind of bummed out that I paid when I didn't need to at that point. But we'll get it sorted. We'll get it sorted, because where there's a will, there is a way. And we're gonna keep it moving. Let me go back to the screen so I can read this all, so we can go look at what this portfolio is looking like now. So we go back to the dashboard. We are actually in profit. We have a total profit of $248.83. The totals are off, though. That's the issue that I have. So whenever this took this snapshot, it was way higher. It was probably earlier during the day today. Because we have the same amount of stuff. We just don't have the right balance, which kind of sucks. But we are in profit. We're total profit. We are in profit at this point, which is cool. Total profit means including the dividends. So for those of you like myself that manually do other stuff with your dividends, whether it's buying things that you don't need necessarily, flexing on people, whatever, you got to account for what you do with those dividends. So that's the main crux of that. So I always tell people this style of investing, this tool that we're using, the high yield dividends, I am a personal believer that this is a capital allocators game, which means that if you're not good with cash flow and moving money around, this might not be for you, because these products do generally underperform the underlying assets. I said that. Let me say that again. Even with you reinvesting, these products are designed to underperform from a growth standard the underlying assets. And there is no shortcut. There is no set and forget. That's the reason you're going to see me active in these portfolios, showing you what capital allocation looks like, because that's who these were made for. They're not made to just set it to drip and then just auto reinvest and then look at it years later and all of a sudden you have $1 bazillion. Like, if you're going to do that, you're better off just saving up your money, buying the underlying stock and just sitting on it. Just to be honest. Now, what I do is I get a good amount of cash flow going, and then I use that cash flow to pay for my things and reinvest and invest in other things outside of these portfolios. So that's how my long-term portfolio is getting built out over in Charles Schwab, for example. But right now we are really focused in on the debt. Now, that is not something that's involving my Robinhood portfolio, because this is specifically built to get a credit card and pay for the credit card bill. That's what we're looking at for this. So we, as we do that, it's not something that I'm worried about over here, but I like looking at these numbers to let me know where I'm at. So like the total profit, we're at 15% total profit on COIW. We are at 3.93% in total profit on LFGY. PLTW is in 21.08% profit, which honestly, come Monday, we're going to be doing some plays. So next update, we're probably going to have some different share counts on a couple of these positions if we continue to run like we are. Round Hill, QDTE, we're up 1.11% total profit. YBTC, we're at 5.92% in total profit. We're looking good. Now, the other thing that I use Snowball Analytics for is to look at this monthly income. So right now we have an annual projected income, and this is always based off the last payments, and it updates as it goes, because you're factoring in those payments over and over again every month, because you're not getting paid the same every month because it's high yield dividends. So you kind of don't know what you're going to get. But monthly, we're looking at around $115.70. Can't complain about that, but we do want this up. I will start getting excited once I start hitting some of my metric goals, which the first one is $100 a week. So once this gets up to about $400, I'm going to be excited, because like that, $100 a week additional passive income in this portfolio is nice. Like, that's going to be good. I want $100 a week out of each position. That's the overarching initial goal set, which is the reason that, like, right now we're looking at that first go round. We're looking at getting to 200 and initially we want to get to $100 in LFGY. But I want to get to that 250 shares, because that'll put me at the metric to where I should be at $100+ every week. But I want to get that with each position. So that would be $500 a week, which is nice. That's a good chunk of change. I don't spend $500 a week now normally under normal circumstances. So that'd be great for me. As far as expenditures, my daily expense on my daily driver card, like once we hit that credit card's definitely going to be in the mail. It'll be here a little bit before then. I think once I get to about 200 a week, it'll sustain itself at that point. But This is what we're looking at. Our yield percentage is 48.04. And the only reason it's not higher is because my fifth position is a balancing-ish position. It's an aggressive balance, in my opinion, the QDTE. Obviously, a play, cover call play off of QQQ. I know that my investing style and my investing strategy is a little bit crazy, and people are always like, you should diversify. That's the closest to diversification that I get. And I understand that I'm doing a weekly. There aren't a lot of weekly options. So like that was another thing, is just there weren't a lot of weekly options that were interesting to me. I know that people are always hating on me because I do not like YMAX. I think it's a garbage product. And it's just personal. It's garbage to me. But it's the same way that some people say that Misty is garbage, and it's garbage to them because they don't believe in Bitcoin. I just don't believe in carrying a bunch of other a group of high yield ETFs where you know what the top performers are, and you just have a bunch of rocks in the bag with the top performers that don't perform well, and then you get to experience NAV erosion like never before and an ever declining yield. It's just not worth it to me. So I don't like it. I don't like that. So that wasn't an option for a weekly. I got burned on that because I don't understand all of the funds, because I wouldn't invest in all of the funds that YieldMax has. They have 3 funds that I like maybe 4. And there's nothing wrong with that, just because you like struck it out the park once. And I mean, honestly, once I add IMST into this mix, people are really going to be hating, because they're going to be like, well, what about Misty? And it's like, well, fun fact, I come from the crypto space. So investing with a company that's actually ingrained and super supportive and ethically aligned with the crypto bros is actually on brand for me. It's just Misty was out first. I'm not going to get rid of my Misty position, but I'll probably at a certain point, my cutoff is looking like it's going to be about 1,500 shares. I will always, unless some sort of major narrative shift changes, I'm always going to have 1,000 shares of Misty. I like it. It's a great, I think it's a great ETF. I think it's YieldMax's best ETF, in my opinion. I will always have that. But like, as far as something that I can get behind and be as fanatical about as people are about YieldMax, the company, I am that fanatical about Bitwise because they support the crypto industry. They are crypto native. They've been a part of it for a very long time. It's not like they make a bunch of funds. Their focus is this space. So of course I'm going to put money over there once they have something that's not going to be redundant in my portfolio, and they pay on a different day than Misty does. So that'll give me 2 payments, and I want that MicroStrategy volatility. And that is honestly a little bit of diversification, right? They're running 2 separate strategies, and we get to see which one gets to do better. Me personally, biasly, I'm voting that IMST is going to be the better performer because they are involved in the space. They understand these products and these companies intimately because they're in the space as well. And they don't have 50 million other funds. That's the other thing. And the funds that they do have are all crypto related. So that's the other thing. Like they should have better performance because they're actively trading that portfolio and that position. So I'm going to be getting involved in that position. We're going to see how it does, but it's not going to go in this portfolio because it's not a weekly. I like weeklies. So, it's what it is. I am agnostic when it comes to tools and products. I do have a little bit of a soft spot for Bitwise. They just didn't have anything that I needed or wanted specifically that would be redundant because I hold Bitcoin. I hold Ethereum. I actually hold MicroStrategy too, but it's just the volatility and being able to make some income off the MicroStrategy volatility. Everybody knows that I'm about that. So we're going to be adding that in as well. and, you know, doing that slow march to 500 to 1,000 shares. So that way I can have that counterbalance big check over in the other portfolio. Now, as promised, we're going to switch to another page. I want to give a shout out to one of our Wolfpack members, Nuggies of Truth. This one's for you, bro. So we're gonna go ahead and answer this question. I told him I'd do a breakdown on this for him specifically on this episode specifically. So shout out to our Wolfpack member, Nuggies of Truth. And he was asking if I had gave a list of subreddits for where I found these strategies. Now, the wheel strategy I did not find on Reddit, but the subreddits that I'm involved in are the Yield Max subreddit, and I'm also in the Misty subreddit. I don't talk in the our dividends subreddit, because those dudes literally, their idea of a good day is finding a dividend yield of 3%, and apparently they're all rich, or they're either all super rich, or they're brokies who are trying to pretend like they're trying to do something that they see people who they perceive to be super rich doing, which in turn never gets them out of the rat race. So to each their own, but they are very vigilant and very much not talking math or numbers. Like, it's just, oh, that doesn't work, you're making too much money. But the money keeps coming in. It's going to go to zero. Like, yeah, they said the same thing about Bitcoin in 2013. Look at you now. Like, how much money have you made since then with your 1% dividend that you think is just the best thing ever? Like, out of here with that. So I'll look in there every once in a while. I'll go through and read stuff. I'll like a thing or two sometimes, but I really don't want to have conversations about finance with people that are emotional about it, because I just do math. And I'm like, hey, if the math checks out and you're right, that's cool. I'll adjust my opinion. But like, if you're just saying stuff is trash because you don't like it, or you didn't get in on it, or you don't want to invest in it because you don't understand it, just say that. Just be like, I don't know what I'm talking about, but I don't like that because you're making more money than me. It's fine. I accept that. But like, if the money's been coming in and it's not going to zero, like, I don't know. I don't have tolerance for people that don't do math. I'm like, this is just simple addition and subtraction at this point. Like, this isn't even complex math. But I digress. Nuggies of Truth was asking, and specifically the strategy that I was talking about in that video. Let me go back so I can get a better look at the screen on that. There we go. No. Yeah, okay, so we're going to talk about the wheel strategy specifically. So what that is the wheel strategy is pretty simple. I'm going to actually switch the screens around here because I can use my Robinhood to show you guys what I'm talking about. So wheel strategy is pretty simple. So we've got all of our stocks. For those of you who are not looking, I'm pulling up my Robinhood account again. Show that. And let's go to Robinhood Legend. I think that gives a better view. Robinhood, their web interface with Robinhood Legend really makes me happy. It's very gratifying. Okay, so over here we're looking at our positions. I've got LFGY highlighted because that is going to be our landing spot for all the future income. So as the income comes in, as I make money, as a portion of my check gets shot over here to grow this portfolio, I will now be just buying indiscriminately LFGY. On Friday, when I get paid, what I will do is wheel, which this is just moving to the next position. And so I have these sorted in the order of funding. I will wheel into YBTC. That means that the dividend that I get paid from LFGY goes into YBTC. Now, this is going to be a little bit of a counterintuitive, weird strategy, at least for the onset. And I might have to switch how I do this, because not every stock or ETF on Robinhood allows you to buy fractional shares. So out of my current list, what I have is I have LFGY, YBTC, COIW, since they're leveraged, this has to be purchased in whole shares. PLTW is also leveraged long, has to be purchased in whole shares. So I can't take scraps and then just like pay under a whole share and get a fractional share of these. I have to buy whole shares. So what is probably going to happen is I will wheel LFGY into YBTC into QDTE. QDTE's payment I will use for buying LFGY. And then when I get paid, as money flows in here, I will buy whole shares of these two positions. I'm just going to have to, I think honestly, I'm probably going to have to fund it that way. But since these are leveraged, as these go up in value, the position size that I'm keeping for these two is $500. As we hit about $600, I'll sell off a few shares and then put that in LFGY. So honestly, what I'm probably going to do is just whatever one of these is lower that day, I'll probably park the money in one of these. And then as we leverage up, like if we're in a position to leverage up, or this is below $500, and I'll buy one of these. But outside of that, the wheel strategy, simply put, is you have a position that you land your money in, which is your first position. And then as that pays out the dividends, you use those dividends to buy the next position. And then as the next position kicks off dividends, you use that to buy the next position. And you can scale this out, I mean, as far as you want. But that's the gist of the wheel strategy. It's not hard. I did not make it up. I'm not taking credit for it. I actually found it trolling through YouTube. I'm either listening to books or podcasts that are something that's important to me related, which is usually finance or mindset or psychology, history, something like that, all day. That's all I do. So one of the videos that popped up in my algorithm, I've got a pretty decent algorithm on YouTube. I think it's like money, serious topics, a little bit of politics. Like I like my YouTube algorithm actually. One of the videos that came up when I started doing research on getting into high yield dividends, because like I just went to the straight up dividend guys when I first found Misty, and they were showing portfolios that were $140,000 that were making less than my $10,000 portfolio a month. And I was like, okay, so y'all can't really help me. But this is the thing. Sound principles carry over regardless of whether you're doing it efficiently or not. So the wheel strategy was one of the things that I learned when I was going through doing my quick and fast YouTube research as I was building out my portfolio to try to help maximize what I was doing, which turned out, I used the wheel strategy for a little bit, but like I always ended up cutting back to Misty. So made it pretty easy for me to kind of figure that out. I was like, okay, I just need to keep buying Misty. And then as I decided to start targeting the debt and getting that paid off, which is where we're at now, which is what we're actively in, I couldn't just blanketly reinvest, but we start tapping margin, other sources of income, doing side jobs, side hustling, house sitting. I'm really good at that apparently. And yeah, so we got the portfolio up to the point to where we're in some margin now on the Robinhood, and we're now at a point to where we can actually start the wheel strategy, which I'm excited about. So we're about to see this cash flow hopefully start kicking itself up a little bit, and we're gonna do what it do. It's gonna be awesome. So, and thank you, Nuggies of Truth, for tapping in down in the comments and making sure to ask questions. You know, I touch and base with everybody as we're talking down in the comments. I do appreciate it. I'm hoping that you guys appreciate that I'm taking the time to respond, because I know a bunch of the gurus really don't. Some of them do, but a lot of them don't. And I do appreciate and kind of rock with the ones that do. Like, those are the people that I watch more personally. I mean, if I'm watching, because I've made it a point to start trying to like comment more on videos that I watch, because I like the comments so much. But like most of the channels that I watch, it seems like everybody's channel besides mine has like 10,000 or plus subs, and a lot of comments. So obviously they're not going to be able to get down into the weeds and get through all those comments. Like, that's just completely impossible, and not even a good level set expectation when you have that many people that are actually engaging with you. But for me, I'm going to be in them comments till I can't. And even when I can't, I'm still going to probably answer the first 20 that pop up on my thing. I don't know. Like, I'll probably sit there for an hour and just go through comments. Like, I don't understand how people don't engage with their communities. Probably because they don't have communities. They just have people that watch their videos. But I'm trying to comment more because I'm not good at commenting. I'm good at replying on my channel, but I watch a lot of YouTube videos and I listen to a lot of stuff and I don't comment. So I figure, since I am doing a platform and I do produce content, it's like, because some of the times you go to people's comments, especially the snarky ones, because like, not some of my comments are spicy. I'm not going to lie. Like, sometimes I'm just like, yo, that doesn't make sense. Or like, this person doesn't know what they're talking about. And so like, whenever somebody tells me I'm dumb, I go check their page, because I'm like, if you're not putting out content, bro, like, I don't really care what you say. So I'm like, at least when they go to my page, there's stuff there. Like, it's like, hey, this person talks and debates with people and will argue with you online. Like, roll up. Like, I don't know, but you know, like, I just feel like you gotta, but it also shows support, because even when you comment, if it's a spicy comment, I don't necessarily agree, it still helps with the algorithm. Like, it's just a little bit of free support. So I appreciate those of you who comment. And as I'm doing my thumbnails and doing my uploads, I am going through and I'm replying to all of you. So till next week, people, this was another Robinhood update, and we'll have another one next week. We'll catch you then. It's your boy Reckless Ray Dinero, and we are out. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.